Okay, ladies and gentlemen, we are now left with the last yet very exciting panel session of the day on role of digital literacy and capacity building in taking financial services to the last mile. Successive attempts by the government through programs like the Digital India program have empowered a large part of the population with basic digital literacy skills. However, there now exists a need to channelize this acquired literacy into economic activities for the whole population to come under the ambit of digital financial inclusion. It would enable them to become a part of the larger digital economy. As a young nation, digital financial inclusion is expected to be the key to ensuring the egalitarian percolation of digitalization's benefits. It is the most effective step towards inclusive development. Eventually, financial inclusiveness will give the freedom to dream and live on one's own terms. We will first have Mr. Anil Kumar, National Mission Manager, National Rural Livelihoods Mission, Ministry of Rural Development, Government of India. Mr. Singh has an immense experience in the field of financial inclusion, financial literacy, microinsurance, self-help groups, enterprise and livelihood finance, etc. In his previous engagement with Rajasthan State Rural Livelihood Mission, Government of Rajasthan, as Senior Technical Advisor cum State Program Manager, Mr. Singh had established and led the financial inclusion vertical for years. Please join me in welcoming him. Next, we have with us Dr. Gayathri Vasudevan, Chief Impact Officer, Sambhav Foundation. Dr. Vasudevan has a directorate in development studies with 30 publications in the areas of labor, employment, gender issues to her credit. She has worked for the International Labour Organization and foresees that education and skilling are the way to build secure and sustainable livelihoods for the underprivileged. Gayathri has been extensively involved in policy issues and community mobilization relating to labor and livelihoods. Please welcome her. Joining them is Ms. Praseeda Kunam, CEO, Samhita Community Development Services. Praseeda has over 19 years of experience in the areas of microfinance, financial literacy, and advising small and micro enterprises. Praseeda holds an MBA degree as well as a Master's in Information Management and from Washington University, St. Louis, and a BA Economics from St. Anne's College, Hyderabad. Please welcome her. May I now invite Mr. Vijay Sai Pratap, co-founder and CEO, Vaani Community Media, a social tech enterprise that builds innovative, voice-based community media technologies for the underserved. Working closely with communities and partners across sectors, Vaani has touched over 3 million individuals, enabling them to not just access and share life-impacting information, but also voice their opinions or ask questions. Please join me in welcoming him as well. And finally, to moderate this session, I would like to invite Mr. Amit Arora, Senior Rural Finance Advisor, World Bank. Amit is a rural development banking specialist and holds more than 25 years of experience in banking, working with different organizations across the globe. He has worked as a development banker focusing on rural cooperatives, agriculture finance, and digital financial inclusion. At present, in his association with the World Bank, he is working in the space of agriculture and MSME financing. Before I request Amit to take over, a gentle reminder to our audience to keep sharing your valuable suggestions on our social media via hashtag led by FEIFC. Amit, over to you.
Thank you, and I'm delighted to see more number of audience than I had originally expected in the last session, so this is quite motivating. This being the last session won't take long. Panelists have been introduced, but just to set the context, since we have a very diverse panel here, Anil representing government, Gayathri from LabourNet and Sambhav Foundation comes from the skilling, the informal sector skilling. Praseeda leads not-for-profit MFI, and Vijay, as was just mentioned, social tech. So maybe the first round, if I may, for some of us who may not be versed with some of these business models, I'd request, starting with Gayathri, if you could share, Gayathri, Given the topic is digital financial literacy, how is this embedded in your business ecosystem in terms of, because you focus on skilling, so is this a common element across all the skilling initiatives you undertake, and why do you feel the need for this?
So initially we weren't. It was not a critical part of our work because we deal a lot with young people. So young people from the age of about 14 years to 35. So 14 to 18 are in school, and 18 to 35 are either in education or are dropped out. These are the two groups, and I'd also categorize there. In the adult group, which is 18 to 35, we have a significant number who are women, and the other who are tradespeople. Men are tradespeople. About 5 years back, we felt there was a huge requirement for them to understand when they start earning, how should they actually treat that money, which is when we started really dealing with the issue of accounts. Do they have accounts? Do they have a PAN number? How will your employer start putting money into your account? And we realized many people have accounts, but as we heard in the previous panel, there was a lot of dormant accounts. So their feeling was the Jandan account was for a government subsidy. So there would be money which comes in. It doesn't matter where it comes from. And in SHGs, there was also a lot of NPAs. Many of them believed if government gave money, there was no requirement to return it, which was another problem which we saw. So we made it mandatory, saying that everyone who comes through our skilling system, which is about 200,000 people per annum, we said have to open an account. We said this is your work account. Think of it like this: any employer, whether it's a full-time employer, a part-time employer, or a managed service gig, anybody who is giving you work is going to insist that you open another account. And that's something you have to get used to, handling multiple accounts if necessary. Otherwise, you have to transact in that account. That's how we began with accounts. And then, of course, over the last 5-6 years, it's moved to saying expenditure through the account, transactions through the accounts. Can we partner with lenders? There are microfinance, there are NBFCs. So we're exploring those models where we could get credit to them because they are having active accounts. In a sense, they transact account. So it's a work account, and that's how it happened. It happened more organically, but we had to put literally the axe one fine day, saying it's important for you not to transact in cash, but start transacting through it. And I think several of the macro trends helped us. The entire Google Pay, Phone Pay, UPI helped us tremendously because suddenly people found it easier to transact. The microfinance NBFC is still a battle for us because of the interest rates. We still have to, prove credibility of work till we're able to. But there are several other fintech platforms which are useful. For example, early salary is a useful tool. Capital, if you have to procure, is easier. So those are the ones where one has to productize and work with the MFIs or NBFCs. We're still not able to access banking. Banking is still a challenge.
Thanks, Gayatri. Vijay, in the introduction, it was mentioned that you're a social tech company. Normally, a tech company one would associate with valuations, ARPU, and things like that. So, digital financial literacy and a tech company almost sounds very counterintuitive. Please explain, how this has happened.
Well, thank you very much, Amit. I'm very glad to be on this August panel on a very important topic that's very close to our hearts as an organization. Now, social tech enterprise probably sounds definitely, as you rightly said, something doesn't seem right when you listen to that. But we are an impact-first organization. Vaani, as an organization which started off with the very objective of addressing information asymmetry, especially impacting the underserved communities, we said, how do we reverse the flow of information? We're looking at conventional approaches to information dissemination, information broadcast, but we identified the challenges associated with that particular approach is that it does not allow for contextual access to information which is contextual, relevant, relatable, inclusive, and something that people can understand in the context of their own environment that they belong to. So we said the bigger challenge is not just about access to contextual information, but also around channels to have conversations around those topics. When we're looking at addressing some very fundamental problems that impact communities, a one-size-fits-all approach to solving those problems does not work, and we are all very well aware of that. But when we have to look at enabling communities to solve those problems, they firstly need to have a better understanding of those challenges. What are the socio-cultural, economic factors which have led to those challenges or gaps? But if they need to have an understanding of those policies that are getting defined or derived or created for them, and if they have to have an understanding of these challenges, they need spaces where they need to get access to information and being able to have those conversations. Unfortunately, conventional channels or platforms do not allow for that, right? Allow for such inclusive or accessible means to have those conversations. We believe that, as I said, policies will work, but only when people have a shared understanding of these policies. When information is made available to them, and when they have conversations within the community's context in a language and in a format that helps them leapfrog the challenges of conventional literacy or digital literacy. Do I need to have a smartphone, or do I need to have access to internet? Do I need to be literate, etc.? When you have those spaces, when you have those channels, it helps them reflect on that information, be able to get that courage to share their opinions, build solidarity, learn from others, and that's how they are able to really bring about the change that we're looking at, right? So from that context, Gramvani has been working to create that network of community-based platforms, hyperlocal, decentralized, community-led platforms. We are at best providing a DPG, a digital public good, a network of community platforms where communities can have these conversations which are very contextual to their problems and their needs. So that's how we as a social tech enterprise are enabling that, and which is why we're different from a conventional tech platform. We are not here for building valuations. We are not here to become a unicorn. Our focus is to be able to enable 100 million users to have contextual conversations and allow the ecosystems to listen to those voices and be able to use those voices for more informed policy making and bring them into the narrative. That's broadly why Gramvani exists.
Sounds fabulous, Vijay. Praseeda, over to you. While your business model is fairly well known, so we can skip that part. You run a MFI, which is not for profit MFI, and these kind of models, financial literacy is almost currently, especially after post-COVID, it is embedded, because I want to ensure that disbursements happen into the bank account, repayment collections happen from the bank account, to improve my efficiency. What has been the demand side journey? Is this a blessing in disguise, and there is indeed intrinsic interest to learn and adopt solutions, or this is being just pushed down the throat?
So, to just give you a little bit of background, we started our financial literacy program way back in 2010. This is when the microfinance sector itself was not like regulated, and all the regulations, there were no caps on interest rates. So that's when we started our financial literacy program to talk about not just loans, but like why they should loans, what are good loans, what are bad loans, and what are the different components that go into taking credit. We also talk about insurance, we also talked about savings, we also talked about a lot of different things, but these are mostly interactive, so through stories and flip charts kind of things. But the digital financial inclusion that we were all talking about, it's I think the disbursement side accelerated after demonetization, because practically all the disbursements had to go through bank accounts. And the second one, and luckily because of this Jan Dhan accounts, many of them had accounts. But the cost and the risk of carrying cash was actually borne by the borrowers, because they were not at their kiosk, they were not actually, they cannot withdraw more than 10,000 per day. So if somebody gets a 25,000 loan, they had to go 3 times, and they also had to pay the cost of this 1% on withdrawal. Plus the risk of carrying cash is also now transferred to the borrower. So in that sense, the actual cost and risk were done by the borrower, and many of them still would like a cash disbursement. Some of them definitely would like a cash disbursement, but it's almost non-existent now in our this thing. And the repayments also, I think again it is another watershed kind of a thing of COVID. After COVID only, like most of them started repaying through their online accounts. And this is also, this is when you're talking about the demand side interest in this. As far as learning is concerned, like I think all of them would want to learn more and understand what's going on. But as far as actually doing the transaction is concerned, people who receive payments online or through mobile money wallets are ready to pay, repay also in the same channel. But people who receive their payments in cash, it's not an option that is preferred by them.
Thanks, Praseeda. Anil, you represent the big brother in this panel, government. So financial literacy, and increasingly more so, digital financial literacy is something that everybody wants to happen, but very few want to bear the cost of this. And when in situation like this, we always look at my bap, the government, and the expectation is government foots this bill. You represent a large government program. If you could share, how does your program drive digital financial literacy, especially on scale that you are doing? That will be very helpful to start this conversation.
Thank you, Amit. Thanks, Sonals and organizers for having me here. So a brief background about the main program. So National Rural Livelihood Mission is an community-based poverty alleviations and livelihood programs based on 5 important pillars. The first one is promoting sustainable institution of poor and primarily women self-help groups. Second, ensuring financial services to these member of the self-help groups, various financial services, various financial products. Third, and promoting agri-based farm livelihood because we are an agrarian society. Third, market linkages and promoting non-farm. And fourth one is skill and employment. So this is the broad context and the pillars of the livelihood. The context, and we have, as of now, we have reached 90 million plus rural household as we speak, and 4 months down the line, we intend to reach 100 million. That's what the objectives kind of say, covering almost entire rural part of the countries. The context in which financial literacy started in NRLM, so sooner we have realized that in the larger ecosystem from the main government, from the banks, there is adequate infrastructure available in terms of the banking services, products, schemes and all that. But if you see the penetrations, it's not up to the required levels. Say just a few data, some of you might be aware also, still now 88% of the women prefer to hold their saving in cash. In spite of having a 78% adult bank account, active bank account, the basic deposit scheme like RD and term deposit is 13 and 9%. Only about 6% or less than 6% of the women invest in some pension products, which is quite required now. Less than 25% of the women having access to basic life insurance products. And the list can go on and so forth. So we realize that if we only work from the supply side with the banks, with the insurance company, with the fintech, and assume that the services will reach automatically to the poor, to the rural India, it's not going to happen. And hence the genesis of the financial literacy under NRLM. So the model that we are having, it's 100% women managed and women led architecture into the country. It's a 3-tier model. At the district level, we have a concept of the master trainers, 4 to 5 master trainers in each and every district of the country. And they're being drawn from the 3 different institutions. 2 from the local district administration, district mission, 1 from the mainstream banking. As you know that the banks have their own infrastructure for the financial literacy, FLC in the districts, 1 person from there, and 1 person from the training institute, RCT, the banks have the training institute at the district levels. So these 4 persons being drawn as a master trainers, they first being trained on given modules. When they come back after receiving the master trainers, they in turn train field level resource person. And field level resource person are none but the slightly qualified women SHG member from the same localities, right? So they provide trainings and orientation to these selected women SHG members. And these trained women SHG members then now go to the villages, to the self-help groups and provide need and context-based financial input, financial awareness, financial trainings and of now. So this is the broad model. So by virtue of this ones, we are having close to 1.4 lakh such foot soldiers in the country. We call them financial literacy CRP, financial literacy community resource persons, covering some 640 districts, 5,600 blocks. And every year we cover 20 million rural households with the input and the service deliveries. In this model, we have also taken in one thing in account from day one, because the banks have their own infrastructure at the district and some in the block level of FLCs. So we don't want to run in contradictions. So from day one, we have onboarded the banks in most of the places. I said the FLC of the banks and this NRLM structure of the government running parallelly or supplementing the effort at the ground levels.
Thanks, Anil. This sounds quite phenomenal in terms of scale. So, Gayathri, for an organization like yours, it would be very difficult to have this kind of a field architecture. No? My assumption is you'll be largely relying on digital tools, which are self-assisted. Is that correct?
So, it's actually, you need a phygital.
Yeah.
Plain digital will not work. But because the financial architecture is becoming digital, it is very important to onboard people into a digital architecture. So what we do is we have our centers. Obviously, it's, as I had started even yesterday, it cannot be as big as state, but hopefully models that we create, state will be able to scale. That's really what we're looking at. We have a digital platform, which is what we call the Sahi platform, which is both a learn and an earn platform. So the learn allows you to do very simple tasks. So we first of all ask them to create their profiles. So if they have to access several financial products, they need KYC. So, how do you really ensure that the KYC is for that product you are able to access? So those things are taught through both a physical and a digital platform. And then it's transactions. So we encourage as much transactions. So today, for example, we are not doing a lot with insurance, but we're doing significant amount with long-term pensions. So that's important for us because ESI onboarding itself is complex often. Just to give you a simple example, e-Aadhaar may not exist. If e-Aadhaar does not exist, you cannot come on to an ESI platform, That means your Aadhaar is older. So if you're a slightly older person, you have a problem like that. Then, as I had said, financial literacy, in my opinion, you cannot teach. You need to live the life for there, You need to either borrow, you have to buy, you have to do something, some transaction. So for that, I think it's well documented also. Plain digital platforms will not do. You will have to have phygital.
Couldn't agree more. Praseeda, you mentioned about loading the cost to the customer. Anil, you mentioned about the adoption rate, not being as much as one would desire. So is this a supply side constraint? No, if investments go into digital financial literacy, you said, there is desire to learn. So naturally, if there is suitability of products, a lot of these community members would want to take to those products. But is there a mismatch that we see in terms of variety of products at right cost? And are these solutions, services available under one umbrella, or they're fairly dispersed?
So Amit, I think it's quite a relevant question. So this you also realize. So when we first entered with this pilot, we started in a few states and few districts and just want to test the model. So what we have realized that in fact in somewhere the community is being bombarded with so much informations, right? Even if they don't require, or maybe required some say 1 year or 2 year down the line. But the model that we in fact in the first instance translate it just provides a lot of information and we assume that they become financially literate. But as the ma'am said, gradually we realize after some times that until and unless they leave the complete cycles or they've been facilitated with the awareness with the service delivery probably will not be able to complete. So soon we have in fact revised the models. So when you say financial literacy and NRLM, we have fixed modules to deliver. So basically it deals in 7 modules, starting with the financial planning and of course saving credit and all, ending to the enterprise financing. Many questions, many ask why only 7 modules? Why don't we talk about the rural India? Why don't talk about the Kisan credit card and other products? So we talk about these 7 modules because in addition to the awareness, we have also designed the service delivery of these 7 modules. So when you go in the field and talk about the insurance, we also have a mechanism to deliver the insurance with the help of the BC Sakhi. When you go and talk about that, these are the good enterprise finance, good enterprises loan from the banks, one should take it. So we also have a mechanism in the field from the banks Sakhi to deliver those services. So the point that I want to make it, so we talk about the very defined concrete modules, which in addition to the awareness, the NRLM will also design the service delivery architecture. So in NRLM, we say that awareness is just one part, but awareness plus service delivery, what we call it the complete cycle under financial literacy and NRLM.
Praseeda, same.
Financial literacy and digital financial literacy are different. Financial literacy, you can probably tell them a lot of things in conversation or tell them for example, when we started our financial literacy, many of the women that we worked with didn't know what a nominee means. So they just went to the bank and then put their neighbor as nominee. So they said, oh, nominee means so there are several stories like that. They didn't understand a lot of banking terminology. So that was one thing. Whereas digital financial literacy, you can't just have a lesson or teach them or tell them a story, because it has to be experiential and not just one time, but you will have to help them in doing the transaction more than one time. And it's also, there are, when you're talking about mismatches, there are many things. Most of our women don't even have phones, smartphones. And where there are smartphones, they are usually in the household and they don't have access to them. So a lot, we've been sending SMS acknowledgements for the repayments that they have made, but even those, they don't have access to it. Even when we say that SMS acknowledgements are being sent, they want to have a loan card, which is which is something that they can see and do. And on top of it, there is network connectivity. So when we are talking about digital financial literacy, there are 2 aspects which are very, very important. One is that experiential learning. So somebody has to handhold for them to do either paying off an electricity bill or something, and also make sure that all of these access components are there. And the third one is actually including in it elements, risk-related elements also, so that you just can't say you transact through this and let it go. You will have to also make them aware of what are the kinds of frauds and risks that can happen. So unless the design of the digital financial literacy program covers all these aspects, I don't think it will be truly useful.
Right. Vijay, you have an interesting model. Usually when we talk about financial literacy, and by that extension again, digital financial literacy, it's a one-way traffic. You do a discourse, dissemination, and you expect the other side to absorb and then use that information. Since you work with communities, leverage technology, so you see this can be a two-way traffic. One is within the community itself and other is the reverse flow. Does information or the communication flow works the other way around also, you leveraging technology?
Absolutely, and I'm actually building on what some of the points that were very rightly said. In fact, even from the previous panel as well, right? So a few points just to touch upon. One was, of course, in terms of creating trusted spaces, right? Listening to information from trusted sources, right? If it might be from the community, some neighbors, some family members, right? Somebody who they trust. Second is being able to listen to the voices, right? I think which is what is the reversal of information, right? So, but where are those spaces? Where do we listen to those voices? Where do we listen to the feedback? Where do we get patterns emerging in terms of grievances that are being faced by communities? Where are those spaces? So that's the second part, which again was pointed out in the previous panel. Third is in terms of, very rightly said, again, it cannot be just an information provision or just literacy that can help bridge this gap. It's about being phygital, ensuring that you have facilitated, supported community-led models where there are people who can help enable, bridge that gaps, not just in terms of access to services, but also very importantly in terms of grievance addressal as well, which I think has been a significant gap, which not a lot of thought is given to, because there might be great services that might be offered, but we were talking to a population segment which is all first time technology users, right? First generation technology users. So for them, when you're looking at services like financial services, there's firstly a huge fear factor, right? We have to overcome that fear factor. So there's a whole behavior change component that comes into perspective. Beyond the behavior change component, there's also that trust comes in only when they know that there are support systems on the ground who can enable and facilitate that transaction, and not just that transaction, but also if there is a problem, then there's a grievance addressal support mechanism as well. So I think that's another very important aspect, that facilitation or support systems or facilitated models or digital models are extremely important. We ran a program called Aapka Paisa Aapki Taakat, right? Focusing on young adolescent girls and women in Nalanda district of Bihar, right? So focusing on the age groups of 17 to 29, young women and adolescent girls. And when we are listening to voices on our platforms, which especially from women, which go beyond talking about nutrition, children's nutrition or maternal health or entertainment, but are talking about budgeting, about access to banking, access to financial services, insurance, it's a great positive sign. However, we also have to note that we are talking about, fighting a very large problem. It's not just about access to services, access to information, or access to tools. We are addressing some very deep-rooted socio-cultural norms as well. As very rightly said by ma'am, in terms of, we're looking at saying that, okay, women who firstly don't have smartphones, even if they have, it's a shared phone. Two is that they are not expected to participate in the financial decisions of their family, right? They're not expected to use those smartphones to access any information relating to banking. There are joint accounts that they hold. So how do we even bring about this conversation about financial independence of women? Unless we bring about a conversation about financial independence of women amongst the family, amongst the community, and bring about a broader community level change, these services, the demand side of the problem will not be addressed. I think we have to be able to look at the last mile as well, the last segment of the population which is really missing out, which is getting excluded from this whole conversation and this narrative. So which is why conversations, listening to these voices, understanding where those challenges are, where those gaps are, and taking a much more holistic approach to behavior change and attitude change amongst the community, and talking about financial independence of women and how it benefits the household and the society in overall, I think is more important at this juncture to bridge that last gap.
Thanks, Vijay. This takes me to my next question. Anil, two parts. One, since you run a large-scale program, and earlier in the day, one of your colleagues was telling about how 100,000 women, the self-help group members, have become BC agents. That's phenomenal. So you have these footprints across the country. So through this process of financial literacy and digital financial literacy as a subset, do you see actually this theory of change working? Is this leading to better adoption, especially social security, given that you're working with women who generally are considered to be, not as active consumers in the financial service space, beyond microfinance credit?
Of course, I think, let me share some of the data. So we started this, in fact, the financial literacy and also our digital finance initiative by virtue of the SHG member being a banking correspondent agent. And we have a 1 lakh plus SHG members and banking correspondent agents. So over a period of 5 years, in fact, in relation to the credit, I'm not talking about the credit. So by virtue of these concrete information and the service delivery mechanism with the help of financial literacy architecture and the BC correspondence, over the last 5 years, in fact, the bank loan to the SHG has jumped 2.5 times. So last year we have been able to mobilize 1.5 lakh crore from the mainstream banking institution with an NPA of 1.86%. And it's a data of the bank, not the government. Similarly, in terms of the social security, in fact, 18-19 social security cover for the SHG members was close to 4.8 million. Last year we just ended in the March and it is 45 million. So almost 10 times increase in the both life and health insurance. Pension was the quite difficult product and all that. There has been 9 times increase in the pension adoption, contributory pension, I'm saying, not saying the DBT. 9 times increase in the pension adoption among the humans, although the long mile to go. So there is, of course, is a quite important role, Amit, but not just this architecture, larger ecosystem also been playing. But what we are realizing by virtue of the model that we are having, it's a phygital, as the ma'am was also saying. So the one quite important thing here, we have, by virtue of the digital system that we have, we've been able to measure the gaps and level of awareness at quite low level, village and even down SHG level. So we know in this SHG, which is combining of 10 to 12 members, what is the level of penetration of saving account, what is the level of penetration of the loan, insurance, pension, how many members having, how many members not having. By virtue of these, we provide the need and concrete base. So if SHG is having, say, only 10% penetration of the health insurance, so our first module on financial literacy on the health, not on the bank loan. Similarly, in the other geography, it could be the less awareness of digital finance. So our whole effort by the virtue of financial literacy architecture will be on the digital financial and not on the insurance kind of things. So this digital system that we have developed help us to know this minute level gaps, and accordingly we define and contextualize in this geography what should be the focus. Training is largely being happened through the physical mode, but this measuring level of awareness and also the system of concurrent impact. So this digital system also help us to know that 6 months down the line in this particular block, so if the penetration of the insurance was 20%, we have a round of financial literacy there, have this 20% increase to the 30% or 40% not. So the digital system also help to measure that one. So in the crux, of course, the system is working fine as well.
Thanks. Second part of the question, Anil, which in the earlier session somebody mentioned about gentlemen here. There is this fear factor, mistrust, or if I may say distrust. What if something goes wrong? While financial literacy, is just one step to create awareness. Where do we stand, as an ecosystem on customer protection and grievance redressal? The more we push the communities to adopt digital solutions, products, whatever we may say, be it Google Pay and what not, and deeper the penetration happens, are we ready as an ecosystem to address these kind of emerging challenges? I almost feel guilty being party of the supply side ecosystem. Do we have that mechanism on ground?
Thanks that you asked this question. It gives me opportunity to share another model of the government that we are doing in the field. So, of course, you have also realized, because we are working, so in fact, customer protection, especially the basic grievance redressal, because the model that I talked about is largely walking model. So our community resource person go into the villages, give the gyan, also facilitate the services and all that kind of things. But what if some women or some in the rural folk having some issue and he in fact want or she want to get the kind of things. So last year what we did, we have designed a concept called it's a center, Saksham center at the sub-block levels. So there is a small physical architecture where our trained community resource person sits, say for 1 or 2 hours in a day. It's fixed, it's defined. It's being widely publicized so that the nearby Gram Panchayat, the villages know. So that is acting as an basic systems of grievance redressal mechanisms kind of things. So it started with 150 centers in the last year, and happy to share that now we have crossed that 1,000 centers. So it's in one typical block we'll having 2 to 3 such centers. It's a station centers. People know that there is a centers. If I having any issue in terms of Like in last panel also somebody is mentioning that I transfer the account, money get debited, but it's not reached to the concerned client. Isme kya karna kind of things. What if in fact through this digital cyber crimes, my money goes debited, but it's not the one I have did through the APS and all kind of things. So the people in the area know, the rural area know that there I will go. The basic grievance redressal is being handled by that center with the women menace. If she's not been able to handle it, then she took that concerned women SHG members or the rural folk to the nearest branch. That said, this is the in fact issue that I have not been able to resolve. Please help me. So it is solving two purposes. We realize almost 60-65% of the cases she herself will able to resolve by providing right information and all that. If she is not, she is taking that rural poor women to the concerned branches or to the concerned bank authority, which is also a kind of facilitation to take care of the basic grievance redressal mechanism. So
Thanks,
this concept of center is working fine, Amit. It's although lots of improvement required, but we are going to scale it up.
Yeah, sounds very promising. On that promising note, if I may ask other three panelists, the clock is ticking, 1 minute each. What, in your view, would be required to move the needle to upscale this journey of digital financial literacy? Is there an ask gap that you would want any other stakeholder to address to move forward on this?
Let me give you the negative side of it. I call it the 3:30 phenomenon. In India, all buses stop in rural areas at 3:30 to 4 o'clock. So that's the day ending. So if we have to today, therefore digital becomes important because our physical access away from a village to come to a tehsil headquarter or a block headquarter, which is where most grievances have to be settled, or district headquarters in many cases, is very difficult. You waste a lot of day, working hours, etc., and women have social constraints which prevent them to go there. So the way to go is digital, but at the same time there are huge roadblocks in access to digital equipment. So, Vijay's Vaani kind of thing may be absolutely necessary, where old style communication is absolutely, sorry I'm saying it old style, Vijay, didn't mean it, but I often think, just logging in, logging off, the entire mechanism itself is complex for a lot of poor women that we work with. And therefore there's a time. And I just want to step away from this into another sphere. 20 million students pass out of 12th standard every year in India. Every year. 260 million of our children are in schools. It is the time for us, when they are in schools, to start bringing several of these elements. Today, as a skill training organization, I can tell you, we do it very, and which is why I really appreciated all my panelists saying that service providing has to be parallel to literacy. So we bring in saying 10 hours digital literacy, 10 hours financial literacy, 10 hours of entrepreneurship. I sometimes think to myself, all of us could have been Bill Gates if we could have done that. So we've all been party to the design and the failure. So as much responsibility there, but it is very important for us to understand that service needs to be brought in early into the life of a girl and a woman. So the earlier you bring in and start her in transactions is the only way to learn. You cannot drive by looking at it. We would have all been great cooks if we were watching MasterChef, right? Doesn't happen. So let's understand there's a physical, there's a digital, there is financial. All three complex. Access to physical is difficult for women, access to digital is difficult for women, access to financial is difficult. So we're plugging all three gaps together. Therefore, I think we should be kind and patient to ourselves. In terms of what's the ask, I think the ask, one is all private models have been based on government infrastructure, right? Without an NRLM, without an SHG groups, MFIs would have been impossible. An urban company would have been impossible if there weren't enough beauty trainings done. So all private entities are based on the government infrastructure with government, state is mandated to do. So my ask would be that private capital should look to see where all is government making the investment, and therefore where can it come. It's not a replacement to government. State has to do what it has to do, no going away. State does not have to become a VC, but state has to create the ambient and atmosphere for private capital to come.
Thanks, Praseeda. Time's up so quickly. Your
So
take.
just picking up from there, I think we need to make like large investments in actually doing this experiential learning that I was talking about. So RBI maybe from its depositor DEA fund or SIDBI or NABARD. We have these large development banks, including like maybe World Bank. So a lot of investment has to be made into capacity building and not just be, like you said, like, just thrust down saying that like you will have to do it or you won't get a loan kind of directive to the ultimate borrower.
Got it.
Or bank.
Vijay?
Yeah, I think most of the key points have already been said. I would just like to say that I think we just have to listen to those voices. We just have to listen to the people who matter. And we have to create those inclusive spaces where their voices are heard. And once we are able to create policies more grounded, more relevant to the target audiences we're all working with, I think the demand side will automatically push the supply side to meet their needs. Right? So I think first and most important is to be able to listen to those voices, create those spaces where we can listen to them and ensure their voices are part of the broader narrative. The second, I think, a very important ask, I think, is from the ecosystem perspective. I think it's a time, we all, I think the clear stakeholders, the governments, again, very rightly put by Gayathri ma'am, is that we are not here to create parallel systems. I think it's about strengthening existing systems. Governments have been doing a great job. We've had the pleasure and privilege of working with the Jivika with an in Bihar, with the Jivika Mobile Vaani, and we've seen the phenomenal success of that and at scale. So I think it's about time to collaborate, bring those components together. And more importantly, I think we've done so many pilots, and I think we really have to look at population scale solutions now. I think that's the real ask. I think as an ecosystem, it'll be a disservice to the communities if we go on keep attempting more and more pilots. There are enough and more proof of things working. So I think it's time to collaborate and make it happen and doing it at population scale. So yeah, thank you so much.
Thanks, Vijay. Actually, that's the takeaway for me also from this discussion. I think there is need for more, if I may say so, CPP models, community public-private partnerships. No, I wish this information symmetry that we have, even in this room. How do we know about your FLCRPs, where they exist, which Praseeda or Gayathri or Vijay can leverage and tell their target audience that why don't you reach out to them? Or how do we engage in a more comprehensive, cohesive manner is something we need to work out and cross leverage the strengths that we all bring to the table. So that would be the takeaway for me on that. I'm not sure. Do we have time for one quick round of question? One, if anyone has. If not, then we're good to move on.
My question to you is, you are talking about those block level sector.
Yes.
सेक्टर है इतने बड़े कंट्री में ये सेक्टर को आप एनजीओ जितनी है अंदर सीएसआर के फंड में उन्होंने उनको ये काम देते जब आप नहीं कर सकते या आपके पास रिसोर्स नहीं है और आप दोगे भी नहीं और करोगे भी नहीं, ये एनजीओ बैठी हुई है, इतना हमारा इतना फायदा हो गया है बड़े बड़े उनको दीजिए के लिए सारे कंट्री कवर हो।
नहीं बट सर ये कब कहा कि नहीं कर सके, मैंने तो कहा कि सरकार इसको और स्केल अप करेगी। 150 से स्टार्ट किया, 1000 सेंटर है और सरकार इसको स्केल अप करने का प्लान करनी है। दैट्स व्हाट आई सेड।
सर एक चीज़ और जो प्रसीदा जी ने कहा, रिजर्व बैंक के पास फंड है जो वो इन एनजीओस को एम्पैनल कर रहे हैं और उनको दे रहे हैं फॉर इम्पार्टिंग दीज फाइनेंशियल एजुकेशंस। सो देयर इज़ अ लार्ज प्रोग्राम विच आरबीआई इज मैनेजिंग जस्ट ऑन द लाइन्स विच यू मेंशन्ड। ऑफ कोर्स ये चैलेंज हमेशा रहेगा, जो हमारी कंट्री का जो स्केल है कितना भी कीजिएगा और करने की ज़रूरत होगी। सो दिस इज़ अ जर्नी दैट वी आर मूविंग ऑन।
Ladies and gentlemen, and with that, we come to the end of the first edition of the Inclusive Finance Conclave. It was a day full of ideas and learnings, and I hope you felt the time you spent with us today was worthwhile. Okay, thank you again. Thank you. Have a good day. Good night. See you next time.